Hello guys and welcome to another video. My name is Mark, I'm an entrepreneur and property investor. And in today's video we're talking about what I believe is one of the least spoken about and best kept secrets in the property market in the UK right now. And that is the fact that I believe that property prices haven't crashed by 5% like Halifax, like Nationwide, like everybody's reporting. I don't believe 5% is the number. I think the number is 20%. And I think nobody's really noticed. And I think right now is possibly one of the best opportunities to buy in the UK that we've had in the last probably decade. So I know that's quite a bold thing to say, but I genuinely believe that right now, for investors anyway, maybe not to buy to own, but for investors, I think right now is a fantastic time to be buying. So let me explain exactly what I mean by all of that. And if you like this sort of video, give it a big like. Please, it helps me out with the algorithm. And if you haven't already subscribed, why not consider subscribing? Every month we give away the subscriber dividend portfolio. All you have to do is comment on a video like this and you'll be in with a chance of winning that. And I put an extra £2 in every month and we pay it out to our subscribers. So guys, let's get into this video and let's talk about what I mean by all of this. So first of all, we can all accept that most news and most authorities are reporting about a 5% reduction in house prices throughout the UK. So if you look at the Halifax, you look at Nationwide, look at the reports coming out from the HMRC, Bank of England, it's all about 5% down. Fine, I accept that. But that's only nominal terms, i.e. if a property was 100 grand, it's now 95. If a property was 200 grand, it's now 190. Those are sold prices versus the average, you know, I get that, that's 5%. But inflation has run at about 15% over the last 2 years. And we need to take that into consideration. So if a property had gone up by 10% and inflation ran at 10%, in real terms, it hasn't gone up at all, has it? In real terms, all that's happened is that the value of the property stayed about the same in currency. The value of the currency's gone down and then the value of the property's gone up to compensate. Now, property at the moment has gone down in value and the value of money has gone down. Now, you take those two things together and suddenly you've got a property market that's crashed by nearly 20%, which would be one of the largest crashes ever. Like if you look at 2008, we're looking at those sort of numbers today, and it's not being reported in the same way at all. Back then it was a credit crunch. It was easy to notice. Right now, it's a rate hike and an inflation spike. I'm a poet and I don't even know it. Like, don't put that bit in. Yeah, do not put that bit in. And that's much harder for news outlets and for people to get their heads around. But the way that I see it is a property that was 100 grand that's now 95 is more like, in real terms, 80,000. And that goes up and changes depending on the numbers that you're looking at. I've just bought a property up in Sheffield, and I'll give you a real world example. Bought a 3-bedroom house for 120,000, I think it was 110, 120, something like that, about a couple of months ago. The mortgage payment on it, that I can tell you with some level of certainty, is £410 a month, interest only. The rental that I've got on that property, if we'd gone back 2 years ago, would have been £695, £700 a month. We got 1,050. So what's happened is capitalism has essentially said that landlords will leave and sell their properties out of the market if they don't make any money. So rents have had to go up, supply and demand metrics have come into play, and capitalism has essentially taken care of all of it and made sure that all that extra money has gone on the rents. So for an investor like myself, there's no real downside to investing today than there was 2 years ago. The profit, the percentage profit, the cash on cash return on investment is about the same. Certainly up north. Down south, slightly different story. I don't want to go into too much detail about that right now because rents just haven't picked up enough down south. And that's down to affordability. And we'll do another video about affordability later. But up north, where the rents were like £700 for a property, it's now £1,000. It's still affordable for people. That's the key thing, because minimum wage is the same up north as it is down south. Bizarrely, although the cost of living is drastically different, the minimum wage, the living wage, whatever they call it today, is the same. Guys, sorry to interrupt this video, but I wanted to give you this information and I promise it'll be no more than 15 seconds. If you want to have a free one-to-one consultation with me, a quick chat about anything at all you need to do is click the link in the description. It will give you a quick form, fill out your details, Tom will get in contact and book it into my calendar with me, then we can have a free consultation. I'm doing this for anybody who wants to talk to me until I get to 10,000 subscribers. So guys, let's get back to the video, but fill in the form, have a chat. So ultimately speaking, we've got this crash in house prices that's hidden by inflation. And it's real terms, it's not nominal terms. Now, inflation works for you in two ways as a property investor. Firstly, it helps property prices go up because as inflation takes effect, if you can imagine that money halves in value, property prices likely double over that same period of time. However, it helps you on the debt side as well. So if you borrow £100,000 and that money becomes worth half as let, and that money becomes worth half as much, well, your debt essentially halves in real terms. Not in nominal terms, but in real terms if you're paying interest only. So property is like the ultimate investment tool to play inflation. Inflation works for you on one side and for you on the other side. However, right now, with the market being what it is and interest rates being what it is, property prices have gone down, inflation's gone up. It's got this mismatch. And for me, that indicates to me that if I can still get a great rental return, which I can, I believe today might well be the best time ever, or certainly in the last 10 years, to be investing in property. All that it's going to take is for interest rates to come down a little bit of security to come back to the market, and those property prices are going to take off. Inflation's already taken care of it. Wages are up. Everything else is up. Property prices are going to go up. In my opinion, property prices have got to go up. Now, will they go down in the short term? I don't know. I don't know the sort of timescales that it's going to take for all of this to come out in the wash. But one thing I can say is every time that anybody has bet against the property market in the long run, they've been wrong. Every time. So if you're in a casino where you spin a roulette wheel and every time it's red, you're foolish, in my opinion, to bet black. And I believe that's the scenario we're in today. Every time you look at the property market, take a 10-year period, it goes up. Take a 20-year period, it goes up. 30-year period, it goes up. And if you can make great cash flow in the meantime, even better. At the moment, on a single let, I would be expecting between 8 and 15% ROI. Cash on cash. So for example, my Sheffield property, I'm making after management, voids, maintenance, all that stuff, I'm probably making about £400 a month. Something like that. But to get into the property cost me about £35,000. So you're looking at a return on investment of about 12%. That's an excellent cash on cash return on investment. At the same time, inflation's working for me against the debt. The debt's coming down in real terms, and I would expect the property price to go up. In nominal terms, maybe not real terms, over the longer period of time. So guys, I know this is kind of complicated to get your head around. Those that are getting it, you're gonna get it. Those that aren't, drop me a line, I will try and explain it a bit better. But what I can say is, in my mind, this represents an exceptional opportunity to buy. Let me know in the comments if you disagree with me. I'm sure many people will. But I think a select few of you out there will also agree with me and understand my arguments with this. I look forward to seeing you on the next video. Like and subscribe as always, guys. Thank you.